And the rupee continues to be very volatile, still holding above that 61 mark, even as financial sector regulators are meeting in Mumbai today to discuss measures to stem the currency meltdown. Easing of overseas borrowing rules are expected to be considered, and there's a whole host of other measures that perhaps they would be coming out with. Joining on the show are Jeremy Stretch, Head of Forex Strategy, CIBC. Also joining us on the show is Ajay Marwa, who's Executive VP and Head Trading, HDFC Bank. Ajay, hi, let me start with you first. And what's your sense on what the RBI or the regulators could be coming in sense of fresh measures?
Well, there's a whole host of measures that we're waiting for. Key announcements on the ECB front are awaited. That's the committee that's meeting this evening in Mumbai. We do expect that there will be some amount of easing of ECB norms. That's the indications we've got through the day. And that could involve a host of things. Could involve increasing the overall limit for the country in terms of total ECBs available. It could involve certain segments or sectors or type of corporates actually being allowed to avail of ECBs from their parent companies, let's say. So it's a host of measures that can be, expected from the ECB front. Other than that, quite frankly, we are looking at things like import curbs on certain important non-essential commodities, things like electronics, etc., which could be on the anvil. We haven't heard anything on that front yet, but anything, quite frankly, to improve the current account situation at this point in time is welcome as far as the rupee is concerned.
Jeremy, what's your sense on all the short-term measures that the RBI has taken to curb the rupee slide on expense of growth, really?
Well, I think the question is, of course, relating to growth, and I think that continues to be one of the sticking points and uncertainties as far as markets are concerned, because clearly we need an environment where growth is stronger, and we need to see that picking up and certainly looking to come back towards the same sort of rate as inflation. Now, I think measures which are aimed to try and stem the weakness of the currency, but at the expense of growth, I think are seen as a retrograde step. I think it may well be the case that markets would take more heedance and more optimism from measures to try and enhance growth and push forward with structural measures, which may not necessarily be the central bank's primary issue, but I think broader structural reforms, I think, will be much more beneficial to both growth and ultimately to the performance of the currency.
Sure. Ajay, what's your sense now coming in for the currency? Because we've already seen 61.80 yesterday, 61.40 is the level that it touched today as well. What's your sense now? For tomorrow, it's a truncated week in any case. Do you see exaggerated moves, volatility continuing?
Quite frankly, the rupee has been susceptible to any kind of large, lumpy demands or supplies, quite frankly. And that is because all kind of slack in the system has kind of disappeared. There are very, very limited amount of positions that banks are running, if any at all. And on the back of that, any kind of lumpy inflow or outflow could drive the currency in either direction. It is also, of course, susceptible to what happens to the dollar index internationally. And we've seen over the last couple of days at least an exaggerated move on that count. So, the rupee could move in either direction. But having said that, the only thing that you could look at is that in terms of where it is today, these are good levels, as far as we're concerned. We believe that the RBI and the government both will look at defending these kinds of levels. 61.20 was the earlier high. We've seen a new high in terms of close today, but today has been a far less volatile day than yesterday. So I would expect that, there should be some measures that are announced today, and assuming international markets really don't throw up any kind of large volatility, the rupee could be supported at these levels.
Vijay, getting you in the conversation as well, what's your sense? Because it's a record low closing in for the rupee today.
Absolutely right, Manisha. The long dollar short rupee trade still remains open, and like you rightly pointed out a while ago, it's a truncated weekend. So let's also not forget there are restrictions on the extent of exposure allowed per broking firm. So what will happen is that the markets will lack depth. Impact costs will be higher, and so will be the beta volatility. And a little bit of a nudge in either direction will result in exaggerated moves on an intraday basis, and those moves typically will be very, very fickle and they won't really last long. So volatility might just go up without there being a very significant change on a day-on-day basis, on a closing basis. Where levels are concerned, 61.80, 61.90 odd level seems to be the threshold for the dollar to gain on the upside. And on the downside, I think 60.65 to 60.80 is where I would give it at.